Hey guys, can you believe it? Another month has flown by. In this video, I share our Tfsa dividend income for the month of February 2023. Let's do this! As usual, before I jump into who paid us and how much, let's take a glance at our portfolio's dividend calendar. January, April, July, and October are the bigger months, and February, this month, May, August, and November are the smaller months. The other months land somewhere in the middle. In February, we received dividends from the following 4 monthly payers. Like usual, we'll go through each paycheck we received, adding up our totals along the way, starting with the smallest payer, not paycheck. First off, I'd like to thank those that hit the like and subscribe button. And I'd like to thank those that will hit the like and subscribe button. Seriously though, thank you for all the support, guys. And let us know in the comments below what extra information you'd like to see in our custom charts for our income updates and portfolio updates. We want this not only to be good for our tracking, but also awesome content you guys want to see. And don't forget to follow our journey on Blossom for free by clicking the link below. Now for our first paycheck, our smallest dividend payment of $23 was from our one closed-ended investment fund, Canoe EIT Income Fund. It provides us with now 3.9% of our yearly dividend income. EIT has consistently paid out 10 cents a month for 2 decades. We have a nice yield on our cost basis. This is basically free money each month as we have received more distributions than our cost basis for this fund. Next, we were paid $45.59 in distributions from SmartCentres Real Estate Investment Trust. They now provide us with 8% of our forward annual dividend income as one of 2 stocks in the real estate industry as a retail REIT. They're trading above their 5-year average yield of 6.1% at a yield of 6.7%. SmartCentres is up 2.9% year to date. SmartCentres has a 5-year dividend growth rate of 1.6%, almost matching inflation, but has not increased dividends since 2019, a few months before the pandemic. They have also raised their distribution 13 years in the last 25, so about 50% of the time. After our first 2 distributions, we're at $68.59. For our third paycheck, we have our one monthly financial payer, First National Financial. We receive $50.40. First National provides us with 8.6% of our annual dividend income. It is up 10% year to date. Currently, it provides a 6% yield. With a 5-year average of 5.8%, this is trading near its average. By PE ratio, it's on the expensive side still. First National Financial had a small 2.1% dividend increase last year. That makes it 11 years of dividend increases and a 5-year dividend growth rate of 5.3% to go along with 6.6% 5-year CAGR on its stock price. It's also good to note this has raised its dividend 15 out of 16 years. The only time it cut its dividend was when it went from an income trust to a corporation 12 years ago. With this monthly dividend, we get to $118.99. And lastly, the Goliath of our portfolio, RioCan Real Estate Investment Trust. They paid us a distribution of $61.03 this month, which is a little less than last month because we sold off some shares in January. This company provides us with a massive 11.1% of our forward yearly dividend income. It has a 5-year average dividend yield of 5.8%, which is drastically higher than the current yield of 4.7%. This is mainly due to RioCan slashing the dividend by 33% back in 2021 during the pandemic. The anticipated distribution increase came to be mid-month. They raised it 6% to 9 cents a unit. It's nice to see that they have raised the distribution 2 years in a row now. So after 4 paychecks on our smallest month, our grand total is $180.02. Our top 3 dividend payments accounted for $157 or 87% of our dividend income for the month of February. With Pembina now a quarterly payer, February, May, August, and November will be small months for us. We're not too worried about payout months. We focus on the portfolio quality and never want to be too dependent on any one company to help the portfolio grow in the event of a dividend cut. As you can see from the breakdown, no one industry or stock dominates our dividend income. Now, a huge part of our dividend income growth are the dividend raises we receive. We had 4 dividend increases this month. Oh yeah, baby. This sure makes up for the dividend cut last month. Not to mention there were so many other notable dividend increases like TMX Group 4.8%, Brookfield Renewable Energy Partners 5.5%, Equitable Group or EQ Bank 6.1%, Intact Financial 10%, Thomson Reuters 10.1%, and Terramont Industries 10.3%, CCL Industries 10.4%, and some old holdings like Go Easy increasing 6%, and Great-West Lifeco 6.1%. Before I share our dividend increases this month, here's what we've been up to over the past few months. Our first dividend increase was Manulife Financial Corporation, a 10.6% raise, bringing the streak to 9 years. This added $30.66 to our annual dividend income. Pretty darn sweet. RioCan REIT had a 6% dividend increase, or 6 cents a unit, bringing its streak to 2 years. This added $43.20 to our annual dividend income. BCE Inc. had a 5.2% dividend increase, or 19 cents per share, bringing its streak to 14 years. This added $19.58 to our annual dividend income. And lastly, TC Energy Corp. raised its dividend 3.3%, bringing its streak to 22 years, the smallest of the bunch. This added $18.62 to our annual dividend income. That adds a total of $112.07 to our annual dividend income from organic growth. At a 4% yield, that's equivalent to adding $2,800 of cold, hard cash. Our forward annual dividend income is sitting at $7,031, down about 19% from last year, with a yield on cost of 7.36%. We have a lot of cash to deploy this year and have just really started. We expect our dividend income to snowball faster as we do. Those that follow our channel know that we see our dividends as our little minions that work hard for us while we sleep. With our minions working harder and harder each year, we can forecast where we'll be in about 10 years. We hope to outpace this forecast as the TFSA contribution room grows in the future. Thanks so much for watching. Until next time, I'm Mr. Financial.